Hey guys, what's up? Hope you guys are having a great day today, and welcome back for another episode of the Weekly Market Analysis. My name is Matthew Spositi, and if this is the first time you're joining me today, basically what I do with this particular video series is I show you guys a more in-depth analysis of my trading ideas on TradingView. I take a lot of trades on TradingView. It's basically me practicing my trading analysis, and it's not anything that I'm taking live. Okay, so before we get into this, I don't take any of these trades live, just for your record. I mean, honestly, when you actually look at the majority of the trades that I take, I'm pretty sure I'm losing a lot more than I'm winning. Now, the reason for that is that I have a strategy in my head, right? That I am trading over all these different currency pairs, all the way down from the Aussie CAD to the dollar yen. But this strategy isn't back tested. So it's important to keep that in mind. It's not back tested. I have back tested it on the Aussie CAD, the Aussie USD, and the CAD Swiss. Those are the only three that I have back tested on. There is a positive expectancy on them, but that's about it. I have not back tested it on anything else. I am currently back testing it over the Euro Yen, and I don't know what other currency pair I'm going to go with after the Euro Yen, but the Euro Yen, so far, there is not a positive expectancy, and I'm halfway through the testing. So I'll be finishing up the testing here, hopefully very soon. It's so difficult to make the time for it, if you know what I mean. Between content creation, editing the content, whether it's video, whether it's audio, like a podcast. I mean, there's a lot of stuff that I'm doing on a week-by-week, on a day-to-day basis, and a week-by-week basis. And in all honesty, back testing, it's very difficult to fit that in. I'm also taking care of my 8th-month-old daughter because I am a stay-at-home dad. So that's also difficult too, and to try to balance all this stuff all at the same time. It's complicated, right? But that being said, guys, this is what I do. This is what this weekly market analysis is for, to show you guys my trades, to show you guys how I come into the markets, and how I analyze the markets, and what I use for my justification, and how I take trades, how I decide to take trades. Now, again, it's all hypothetical, right? But you could call it paper trading, if you will. Another reason is that we are also trading this, or we are tracking every single trade in the unback-tested TradingView portfolio. It's on the 60-minute chart, which is why that's there. And it's over a whole bunch of currency pairs. We started doing this back in July of 2019. 2019. The funny thing is that you'll notice that we jump from October of 2019 to April of 2020. And the reason is that gap in between there was when my daughter was born. Okay, so and then we picked it back up in April of 2020, and we've been going ever since. Now, this trading strategy does send a lot of different trade signals and things of that nature, or at least it can. I mean, in the month of June, let's see, we've got at least 33 trades here that we ended up taking. The bulk of them were losers, mind you, but we still took 33 trades. Now, granted, I mean, that's really not all that surprising considering the fact that we're trading this many different currency pairs. Now, the reason I wanted to show you this is because, I'm showing you guys what happens effectively when you are trading an unback-tested strategy. I mean, we went up for a while, and we actually peaked at 37.91, but then we tanked, and we're still tanking. We're still falling. I'm kind of hoping that I'll trade this all the way to $0, because that's what I think is going to happen. You're trading a strategy, you have no idea whether it's profitable or not. I know that the strategy can be profitable on certain currency pairs, but I have no idea if it's actually profitable on the currency pairs that I'm trading them on. Again, I only have confirmed that it's profitable on 3 in the time frame that I back tested it on. And I don't mean time frame by the chart interval. I mean time frame as in from start date to the end date, which with regards to where I trade. I think it was I started in 2010, and I carried each trade at back testing out to over 100 trades, so like 2012 or something like that. So, who knows? It could always just all of a sudden become unprofitable, later down the line, although Hopefully that's not the case. I am a little concerned that I backtested so far back. One thing I really want to do is I want to start backtesting it a little closer to more of the current time. So with the Euro Yen, I'm actually backtesting it over 2017 data, and I'm now, I believe, in 2018. So we'll see kind of how that goes. But guys, don't take trades unless you have backtested. Let this be a lesson to you. Do not take trades unless you have backtested the strategy. I don't care how good the strategy sounds. It doesn't normally end well. Okay? So just keep that in mind. Okay, let's go ahead and start going over this stuff. So for the first trade, we got the dollar CAD here. Ultimately, the dollar CAD has been downtrending since March 2020. And, we ever since probably about June 10th, we kind of bottomed out June 10th, and now we're kind of heading higher. I don't know if we're going to continue to head higher or whether we're going to continue to head lower. To be completely fair, though, what happened, or the reason I'm looking at taking this trade, is because we had a break above, close above. So what the market did was the market came up here. I'll draw it in for you guys. We had our initial pulse here, initial leg, and then we had an outside return all the way down here, and then we had an extension, and we made a new higher close. We closed above this structure level. What does that mean? To me, that means that the market, there is a chance that the market is telling us, sending us a signal, if you will, that the market's going to rally higher. So we came down, and what I did was I drew my fib retracement tool from the swing low to the swing high. And I got a 618 fib retracement at the 135.73 price level. That's where I put my entry. I put my target up here at the highest body of the candlestick. I say body of the candlestick because, and not the wick, because, and I don't say the highest close either, because sometimes you can have a big red candlestick and the highest close would be down here, and basically the highest body of the candlestick would all be up here, but all the way up here. But because I said it's the highest close, I wouldn't be able to place my target all the way up here. I'd have to place it down here. So that's why I say the highest body of the candlestick. Or another, I guess you could say the highest point on the body of the candlestick. The wicks are not what I classify as the body of the candlestick. I don't classify wicks as that. Now I could capture in a few more pips. Probably wouldn't be a bad idea. I mean, right here we're at 37.12. If I was to do right here 37.15, so it would capture a few more pips. But all in all, okay, all in all, this is how I determine where I place my targets. And then, in order to place the stop loss, I look at the lowest low where I measured my fib retracement tool from, and I count 10 pips below that low. So 134.86, that would be 134.76 right here. And that's where I would place my stop loss. I hope that makes sense. I mean, it's pretty cut and it's very, very simplistic. It's very cut and dry. It's not sexy or anything, but that's generally speaking what I do with these trades. But that's what I do with the dollar CAD. We broke up here where it looks like we're putting in a complex pullback. If you guys don't know what a complex pullback is, I did a trading lesson video, an educational video where I talked with you guys about what complex pullbacks are and how you can trade them. And yeah, so that's on my YouTube channel. Go check that out if you're interested. But basically, a complex pullback is basically like this. This would be classified as a two drives complex pullback. If that's all this is, that's what this would be classified as, okay? This would be classified as a two drives complex pullback. We have an extension, a retracement, and then another extension. Whoop, for some reason didn't click right there. All right, and that's what. So this is what a two drives complex pullback looks like. It is a retracement pattern that exists in an overarching pattern. We can find another example here, real quick. This right here, I believe. Let's see. Yeah. Okay. This would be a two drives complex pullback. Well, we didn't really close below. Okay, ideally, no. This would be a two drives complex pullback. Essentially, we were trending down. As you can very clearly see, we had our initial high here, our initial low, an outside return or retracement, and then we had a new lower close, another retracement, new lower, low, lower close. And then as you can see here, what happened is we retraced, consolidated sideways. We looked like we were going to go ahead and continue, but we didn't. And then we retraced higher. And then we rolled over. Now, what ended up happening here was that we actually retested the lows here, and then we ended up consolidating sideways until we finally broke out and ended up continuing the trend. Actually, very interesting thing here to keep in mind. If you look at this, what does this look like to you guys? Hopefully you guys know. If not, I will more than gladly tell you, because it's kind of cool. I think it's cool. What does this look like to you? This is what we call a descending triangle. Basically, we're finding support here, and we're constantly bouncing off that support, and we're getting lower and lower and lower as we do it. We're making lower highs as we do it. And this is a bearish pattern. This is a pattern that usually indicates the market is going to end up falling, and it's going to become bearish. And that's exactly what ended up happening. So that's what a complex pullback is. And as you can see here, that's exactly what it looks like we have. Now, this could be a full-on reversal, and if this is a full-on reversal, then the market is just going to continue higher. It may be a temporary bullish trend. We could have a temporary bullish trend that comes all the way up, 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 and then falls to the floor. That could absolutely be something that happens. There's really no way of knowing. Certainly, there's no way of knowing with live data, which is what we have here. So, basically, I try to predict where the overall trend is going. I mean, we can look at the daily chart. That's always a good way of looking at stuff. And if you really notice here, what we actually have is that the market, let's look at the weekly. Weekly will probably give us a better idea of what's going on here. So as you can see here, the weekly goes all the way back to 1994. And we came all the way up here and peaked at 161.85 in 2002. We crashed and we bottomed out in 2007. We started going higher again, but then we fell again, and then now we're going higher. Okay, we're going higher, and then we fell and fell again, and now we're going higher again. So long term, this could be a double top. That's what this looks like to me. This could absolutely be a double top. We have the highest high, the highest candlestick here equals the highest close on the first test. So not bad. It could absolutely be a double top, which would mean that the market could potentially end up falling and continuing this bearish trend that we've had here. Or we could be rallying and we could go higher and break above here. But, I mean, that's on the weekly chart. We're not going to know that for years, more than likely. So it's just one of those things. We can kind of look at it. We can kind of try and figure out what's going to happen. But in the end, there's really no way of knowing. So you do the best analysis you could do, and you kind of go from there. All right, next pair is the pound dollar. Pound dollar, not feeling too strongly about this. We've already trended above my entry, unfortunately. Not really a happy camper here. As you can see here, we are definitely bear. We're kind of actually, it's hard to tell. We're really bullish since March 19th of this year. We had our initial low, initial high, our retracement, and then a new higher close. So we are bullish now, but we have been bearish. Let's look at the 4 hour. We've been bearish literally since, December 15th, 2019. So we've been bearish for quite some time, and actually been bearish even longer than that. But you can have bullish trends inside of bearish trends. So if you look at here, we went from December 10th of 2018 all the way to March 13th of 2019. We had a bullish trend for, not quite a year, but almost a year inside of an overarching bearish trend. We had it here again, August 2019, all the way up to December 2019. Again, not a full year, but definitely a bullish trend inside of an overarching bearish trend. We had a false breakout up here, where we ended up breaking out at, say, 134.95. Yeah, we ended up closing above this structure level. So we ended up, we had a false breakout, and then we ended up falling down and continuing the bearish trend. And as you can see here, we're kind of going higher. I don't know if we're going to continue to go higher or if we're going to continue to go lower. The way I see this is if I was to draw my fib retracement tool from all the way up here to all the way down here, from the swing high to the swing low, you know, we hit a 618 fib retracement. We had a break below, close below. We retraced higher into a 618 fib retracement, the golden Fibonacci ratio, if you will. And now we very well could be going lower. This could be a reversal, of course. There's always the chance of that, but so far that's not what it looks like. So that's kind of my methodology. That's the idea. That's why I took this trade. Largely, I took this trade because this is what I'm seeing: extension, or initial high, initial low, retracement, extension, retracement, extension. We made a new lower low, lower close. Now we're retracing, and I'm hoping that we're going to make another new lower low, lower close. However, we do have a double bottom here, so that could indicate a double bottom is a trend reversal pattern. So they're not always accurate, but they can be. So this is absolutely a sign that we could end up rallying and getting stopped out. Knowing my luck, we very well might. Unfortunately, this strategy, I haven't tested it over the pound dollar yet, so I really don't know whether it would be successful on the pound dollar or not. Honestly, though, I don't know. I don't feel that strongly about it because we've already closed above my entry, or at least we've already blown past my entry. So I don't know how I feel about it, but I don't feel currently. I'm not feeling the best about it. Pound Swiss is exactly the same story. We took this trade here. We found it on the July 1st of 2020. So that was literally today at 5 a.m. I had actually found this trade a little while back, like last week or the week before. I think I found it last week. And I actually drew my fib retracement tool, or used my fib retracement tool to draw on here. And I just placed my entry on there, and I waited and waited and waited, and finally we got involved. Trouble here is, I mean, we've been bearish since June 5th of this year. Actually, you can even go all the way back here and say we've been bearish since February 17th of 2020. And we started having a bullish trend here, and now we're continuing down. So I'm hoping that this is just going to be a continuation of the trend. I mean, we had a break below, close below. We broke below structure right here. We violated the structure level at 117.43, and now we have bottomed out here, and we're kind of retracing. So I'm hoping that the idea is that we're going to retrace here, and we're going to head lower. Here's one thing that I will say, though. If the market decides that it isn't going to value and respect this price level right here, or this the structure area right here, change the colors up here. If the market decides it's not going to value this structure zone, then what's going to happen is the market is going to rally, and then that will lead me to probably measure my fib retracement tool from this swing high to this swing low to see if I can go ahead and get short there, and if the market is going to value this structure zone. But all in all, nobody knows. So I'll take this trade, and I'll see what happens. It might end up working out really, really well for me. It might not. So this is the problem when you're dealing with structure. Structure can be a great source of trying to determine where the market is going. But the problem with structure is that it also is very fickle. Okay? 9 times it does not consistently do the same thing over and over and over again. I mean, it does, yes. I mean, obviously the market trends and consolidates, and it does repeat itself a lot in terms of its movements. But I'm trying to think of a good idea, a good way of describing this. The market, just because the market goes sideways like this, extends lower, retraces, just because historically you found that it retraced and then continued and extended lower again, does not mean it will always do that. As I said, the market is very fickle and a lot of times doesn't know what it wants to do. So that's why it's important to backtest, backtest, backtest. I say that all the time. All right, let's go ahead and move on to the Euro-Yen. Euro-Yen pair, we actually have 2 different trades on here. This bigger trade, you guys already know about, I talked about it in previous episodes. I ended up taking this trade, ago, on June 23rd, we're now in July, so that was what, 2 weeks ago? Actually, a little less than 2 weeks. It was about a week ago. It was last Tuesday. And so I took this trade back then, and we're still waiting to see what's going to happen, but it's kind of difficult to tell here, and I'm sorry about that. I don't really want to do... Well, okay, I'll delete this so you can see it a bit better. Try to ignore this yellow line and whatnot, and just kind of focus on this area right here. So what ended up happening is that we have a shorting opportunity right here where we already got involved in last week, and that is the overarching trade that I'm taking. However, we ended up putting in a 2 drives complex pullback and are now looking, and so I'm wondering if this is going to be a 3 drives complex pullback, if it's going to, retrace and head higher again and then fall over. This could also be a reversal, although I'm not really seeing a lot of signs of that, but it very well could be. And if it is a reversal, I thought, hey, you know what? If this is a 3 drives complex pullback, or if this is a reversal, I'll make money on this tiny little trade, and I'll continue to trade it all the way up as much as I possibly can. So that was the general idea. That's why I decided to take this trade. Now, I will say this is also called a perfect hedge. You can't do this. It is illegal to do this in the United States, where you take a very similar trade, but you take it in the opposite direction. So right now, I'm shorting the market. I cannot go long in the exact same market. I can't go long in the same currency pair, right? We are shorting in the euro-yen. I can't go long in the euro-yen. Also, that would be illegal. So, but this is what they call a perfect hedge, all right? An imperfect hedge is where, let's say, you go long in the euro-yen and then you short in the yen-euro. It's basically the same pair, just flipped. That would be an imperfect hedge. At least I think that would be. I don't know if that would be classified as a perfect hedge. Imperfect hedges you can take. I think that would be fine. Not sure though. I would definitely do some research and figure out whether that's legal. What you could do, and I know this is legal, is you could short the euro yen, and then if you wanted to counter that, you would look at another chart that seems to be acting in the opposite way as the euro yen is acting. So perhaps you would want to, I don't know. Let's say the euro is depreciating against the yen, so the euro is falling against the yen, but it is appreciating against the Canadian dollar. So you could go long in the euro CAD and short in the euro yen. And that would be a way to kind of hedge your risk. Now, there's no way of knowing that. I mean, if we look here at the EURCAD, what's the EURCAD doing? I mean, well, we were bearish from March 19th, 2020, bottomed out April 30th, 2020, and now we're just kind of consolidating sideways. Compare that to the euro yen, where we're not really consolidating, we're just going down, and now we're kind of looking like we're going back up. So in reality, it's not always foolproof, okay? I don't really do anything with hedging. I'm going to be completely honest with you. I do not hedge my trades. I don't even attempt to do that. But I just wanted to inform you that that is what a perfect hedge looks like, and that is what an imperfect hedge looks like. So just kind of interesting. Let me go ahead and draw this in real quick, and we'll continue with our analysis. Go close enough. Right there. Okay, next currency pair is the euro-pound. All right, euro-pound, I really do not feel very strongly about, as it has blown past my entry and has done it in a big way. It could very well find some support level here and then rally, but I mean, if it's already gone this far, most of the time that's not going to be the case. Most of the time, that's not going to happen. So honestly, this was very, very minor structure right here. So this is a minor structure zone that I was hoping the market would respect. In a strong market, it may have respected this, but so far it's not looking like it's going to. If this happens again, the overall trade I probably would take is not, I wouldn't measure from this swing low to this swing high. I would probably measure from this structure low to this structure high right here. That's probably what I would measure from, because that is the overarching movement that I see. Now, granted, that does present a fair amount of risk. If you do this, you're going to be risking a lot more money. And also, if this 618 fib retracement level, if you were to measure from here to here, the fib retracement level is going to be a little higher if you were to measure from this structure low to this structure high right here. As you can see, if you were to measure from this structure low to this structure high, you've got an entry level that's right here. The 618 fib retracement level is right here. It's higher than that of this fib retracement level. But this is the overarching move. The move started down here, extended, retraced, extended. So this is relatively more significant in terms of structure. It's major structure compared to this minor structure level. And I do this all the time. I always take trades off minor structure levels, and I get burnt a lot. And yeah, maybe I shouldn't be doing that. Maybe I should. Honestly, there really is no right or wrong answer to this. All that matters is that you're testing your trading strategy. That's the most important thing here. If you test it and you find that you can go ahead and you can trade with these minor structure levels, you have a positive expectancy doing that, then fine. Hey, no big deal. If I was to test the euro pound and find out that I don't have a positive expectancy by attempting to trade these minor structure levels, then I wouldn't do it. So, but we ended up breaking up here. We broke higher, we broke above, closed above, made a new higher close, and now we're retracing back in. So hopefully it will work out, but it's not looking like it's going to. The next trade, let's see, it was euro pound. We got euro Aussie. I do. I have euro Aussie. Well, that's new. No, I don't. Oh yeah, I do. Huh. Sorry about that. I was about to say, what are you talking about? Euro Aussie already came to fruition for me, so that's why it wasn't actually on the chart. I erased the chart. That's why. So this is what happened. Euro Aussie, we had a break below, close above. We actually, it's hard to see here. Let me see if I can zoom in for you guys. Next the ad there. Okay, so as you can see here, we broke above and closed above this structure point, which was very, very significant, or at least I thought it was significant. And because of that, we consolidated sideways, and then I thought this was a breakout. I thought we were breaking out of the consolidation, and then we were going to continue to, it was going to retrace and continue higher. That's why I took this trade. Unfortunately, this was a false breakout, and now we broke out again to the downside of this consolidation. So that's unfortunately what happened. You're going to have those type of situations when you're trading structure. It's something that just happens every now and then. It just does. So it's unfortunate, but that's more or less what happened, and that's why we ended up getting stopped out there. And then there's one other trade, the CAD yen. The CAD yen, again, we're basically bearish at this moment, or at least we were bearish for a time, and then we kind of started going higher, and then we just been consolidating sideways. Again, I thought that we were going to continue to work our way down, lower and lower, and ultimately continue the bearish trend. We still might, but we ended up breaking out of this consolidation, and yeah, now, well, actually, no, we didn't break out. We didn't break out yet. If this continues higher, we will break out. But we didn't actually close above the structure level yet. So there is a possibility that we could get rejected, but, I don't know yet. So what I basically did here, I'm going to zoom in again so I can kind of show you guys, was this is what I was looking at. I was looking how the market basically more or less, I can't say it was extending because it didn't extend beyond any other previous structure, but the market was kind of consolidating sideways, but the market came down, came back up, and came down again. It made a new structure low with regards to this. It violated this structure. Now, it did not make a new structure low with regards to this one, but if we were to ignore that, what we have here is initial high, initial low, retracement, extension. So that's why I ended up taking this trade. We were kind of trending down inside of this consolidation, inside of the structure level in this consolidation area. So I decided, hey, since we broke below, closed below, and we violated this structure level, I know it's not a new lower, low, lower close in terms of the overall structure that we're looking at, but with regards to the most immediate structure, it is. And we broke below, we closed below this structure level. So I figured, hey, I'll go ahead and measure my fib retracement tool, and hopefully it will just roll over and break lower and end up, continuing the bearish trend that we're on. But unfortunately, it didn't. It actually broke higher. So that's quite disappointing, but that's the way it is. The main reason I'm posting this trade, even though it's a loser, is because I always want to try to be as transparent as I possibly can when it comes to my trading, okay? My trading is something that I really want to be transparent. I want you guys to see the realities of trading. I don't want you to see some candy-coated, lifestyle that doesn't exist, because that's the bulk of what you see in trading. When you come into the markets, it's all, trade from the beach, become wealthy, have all these nice cars, become super rich, have this nice, buy this nice house, trade from anywhere in the world. And while the mobility aspect of it is true, you could trade on the beach, although I don't know who the hell would ever want to trade on the beach. The odds are is that, it's not quite as simple. They make it sound easy. They make it sound like you could just come in and start trading with very little experience, with very little effort. And guys, I'm hoping, if nothing else, I'm showing you that that is not the reality. There's a lot of work that goes into trading. There's a lot of work that goes into it. It's incredibly important that you are doing the necessary work to become a consistently profitable trader. Do not just trade stuff willy-nilly without even testing it. I know that's a weird term, but you get what I'm saying, right? Make sure that you're testing your strategies, because the reality of trading is that if you don't know your numbers, you're going to lose money. Even if you do know your numbers, you could still end up losing money. The reality of trading is that trading is not always consistent. So you need to take a strategy, write it down, and then test it over a portfolio, a basket of currency pairs to see, or whatever. If you're in the stock market, it could be stocks. In the futures market, it could be futures contracts, whatever. But test it over a basket of different markets and see how it performs. And then and only then will you have a good way to draw from. No, past performance is not indicative of future performance, okay? That is absolutely true. But it's the only measuring stick that we have. If we don't use the past to measure against, what are we really measuring with? How are we going to know whether we're doing well? We have to have a measuring tool of some kind. Otherwise, we can't judge whether performance is good or whether it's bad. And that's true for everything. That's not just true for trading. So you have to judge things. You have to essentially test things historically so that you have a measuring stick to go off of. And hopefully, what you back-tested your strategy on, hopefully you did enough of the testing to get a pretty good idea of whether it will be profitable or not trading on that particular currency pair or in that particular market, and it'll end up working out for you. But, in the end, you just kind of have to do that. And it takes a long time, and it's not easy. It is not an easy thing to do at all. At one point in time, I actually started to do a series where I was going to show you start to finish, from creating a strategy to back testing the strategy over a currency pair, and then to ultimately show and then start trading it over live data to show you guys the overall process. And I actually never ended up doing that because it was a long process, and back testing took hours upon hours upon hours. And I really didn't think there was anybody out there who was honestly going to watch me backtest. It's monotonous, it's rather boring, and I really genuinely didn't believe. I started recording it, started making the episodes, and I just didn't feel like anyone was really all that interested in learning it. So I just kind of stopped. If you guys are interested, hey, comment on the section below and let me know. Yes, I would like to see you do a series, and I'll redo the series with this particular strategy that we're trading here on TradingView, and I will go ahead and pick a currency pair and test it and record all those episodes and show you guys. But it can take hours. I'm gonna say an hour of trading sometimes normally gets me like 3-4 different patterns that I find in the backtesting. So, I mean, just imagine, that's 1 hour. You're talking about finding 100 trades. Okay? I mean, look, this was live data, and I'll admit I wasn't even, sorry, you can't see. This was live data, right? And I'll admit I wasn't trading consistently all the time. But, I mean, look at this. We started in July of 2019. And now we're at 157 trades, actually -6 because I've got 6 columns up here that are actually, I've got 6 columns up here that are not, trades at all, so -6. So we've got 151 trades here. And it's taken 2 years? Just about. Let's see, what was it? What did I say? It was July. Yeah, July 5th. And in a few days, it's going to be 2 years worth of trading. Now, granted, again, there is a huge discrepancy here between the 2019 and the 2020 data, these 2 dates right here. And that was because I was taking a break because my daughter was born and I didn't trade for a while. So, yes, there would be more trades, okay? So, just keep that in mind. There probably would be a lot more trades than just this. We'd probably be well into the 200s. In terms of our trades, maybe more. But that being said, though, it takes a while. It takes a while to find the data. Even if you're, moving the data tick by tick and you're actually controlling how quickly the market advances so that you can test, that's why you back test. Still, it can take a while. So just keep that in mind, guys. But hey, trading is really cool. I love it. I wouldn't give it up for the world. I just want you guys to be aware of the realities of it all. Okay? That's what I want you guys to be aware of. Be aware of the realities of your trading. Be aware that it is not an easy, career that you can just simply jump into. It's hard. It takes work. It's like becoming a pro basketball player or football player. It takes a lot of work. You are competing against tons of people. Whatever you do, do not allow yourself to think that it's easy. It's simple. It's simple enough to understand. I like to keep my trading strategies pretty simple. My trading strategies are simple. But it's not easy. Okay? So just keep that in mind. It's still a wonderful thing. I don't mean to dissuade you from doing it. It's still a wonderful thing to do, and I would highly advise anyone who's interested in controlling the source of their income, this is a great way to do it. But again, it comes with a lot of heartache. So just keep that in mind. All right, guys. So, I wanted to talk about the current recession, and I wanted to give you guys an update on all of the economic activity that's going on here. I think that this is a very appropriate thing to talk about in these weekly market analysis videos. I always have like some kind of motivation or something I'm talking about at the end of these episodes when I'm done going over my currency pairs and stuff. So I kind of wanted to do that here, just take a few minutes to do that. So overall, the economic situation, guys, is not looking good. So for those of you who don't know, all right, the people who are unemployed and have filed for unemployment or receiving unemployment are not only receiving unemployment from their state, but they're also receiving unemployment from the federal government. The federal government has been giving them an extra $600 a week, okay? Not a month, a week, which is a lot of money for some people. And they've been giving them an extra $600 a week in unemployment checks, and that program is going to be ending on July 31st, the end of this month. This is pretty scary because, whether you agree with the stimulus packets or not, I don't agree with the stimulus packets because the economy needs to crash. Prices need to get cheaper. We are overpriced right now. The stock market is way too expensive. Real estate is expensive. Every asset valuations are off the charts right now. And the only reason is because the government keeps printing money and injecting it into the economy, and banks keep lending out money that they don't have in cash reserves. This is generally what causes price inflation, is monetary inflation. The increase in the supply of money causes, once that money gets circulated into the economy, it causes prices to rise. Now, obviously, they don't rise across the board, but they do rise. They just rise wherever the money is being spent, right? Wherever the money is, quote unquote, circulated. And so what's actually going on here is, so we do need the market to crash, but that's going to have a lot of negative impact on a lot of people. A lot of people are going to be out of jobs. And it can be very, very scary. I've lived through stuff like this before. I know the pain that goes on. Guys, I don't know if you guys are aware, and maybe you haven't heard the story. If you're just joining me, you may have not actually heard me tell the story, so I'm going to go ahead and tell it. You know, when my wife and I first got married, we didn't have hardly any money. We were both working part-time jobs. We couldn't even live on our own. I mean, we live in Texas, all right, North Texas to be specific, and Texas has cheap real estate values compared to a lot of other parts of the country and a lot of parts of the world for that matter. And Texas, on top of the cheap real estate value, it also has cheap renting fees with regards to apartments, and we couldn't even afford that. So we ended up having to live with friends for a while. Well, the friends that we were living with was this other couple. They were really, really great people where, well, the husband ended up losing his job and got another job back, but the job that he got back was not it wasn't paying nearly as much money as the job that he previously had. And over the years, they struggled and struggled and struggled for a long time. They were nice enough to take us in spite of all this. And we needed a place to stay. And what ended up happening was that after years of struggling to try to keep that house afloat, our friends ended up getting evicted. And my wife and I were living with them at the same time, so we got evicted with them. They had this formal dining room that we had converted into a makeshift apartment, and a family room, which was kind of like a secondary living room, right, where you kind of just go, maybe you watch TV, something of that nature. So we kind of converted all that into a secondary apartment, so our stuff was out in front of the house. It was at the front end of the home, so that when the eviction occurred, all of our stuff got thrown out on the front lawn. Guys, it was bad. It's very, very painful. I don't know if I can honestly express the amount of pain that was there. We had neighbors that were driving by that were saying, oh my gosh, what happened? Just making it even more embarrassing that we had just gotten kicked out of our friend's house and our friends just got kicked out of their house. I mean, it was bad. And it sucked. I know what it's like to not have any money, to be broke, essentially. To not even be able to afford to live on your own. I know what it's like to go through an eviction and to get kicked out of where you live. It's not a fun experience at all. I wouldn't want to wish it on anybody. So, look, when I say that the economy needs to crash, okay, I know that means that a lot of people are going to effectively lose their jobs. People are already losing their jobs in the tens of millions. And it's going to get worse. You see, here's what they don't want you to know. But the recession isn't over yet. The economy needs to crash. If it continues to go higher, then the crash is going to get worse and worse and worse. Guys, this is a boom. We have a boom-bust cycle here in America. Everywhere does. This is just part of economics. You always have a boom-bust cycle. Whether you have a completely free market economy or not, you always are going to have a boom-bust cycle. You can have a boom-bust cycle in small little industries as well that are completely isolated from the rest of the economy, like milk. At one point in time, there was this big run-up in the price of and the value of milk. So a lot more dairy farmers came in and started, buying cows and buying big plots of land, and they were harvesting the milk from these cows and stuff. And you saw an increase in competition in that industry. Well, then all of a sudden, you had so many different dairy farmers that came in. After enough came in, it disrupted the market enough. People didn't want to pay higher prices. As more competition came in, it lowered the prices more and more and more, which was really good for the consumer. Hey, you got to buy milk at a dirt cheap price. That was awesome. But it ended up hurting the farmers. And when price got to a certain low, a certain point, a lot of farmers had too much debt, had too many issues. They couldn't operate efficiently as other farmers did, and they ended up going under. That's what happens in an economy. That's the boom and bust cycle. If you don't allow the businesses to go under, then you've got to be paying those businesses money. And where are you going to get the money to pay a business that's losing money? Well, usually it's the government. And if the government's doing it, the government's getting their money from, guess who? You and me. They're getting the money from everyday taxpayers. So they're basically stealing money from everybody else in order to give money to a company that effectively is not profitable. Do this enough and it causes a drag on the economy, and that's what's going on right now. These stimulus checks that we're getting, these PPP loans that businesses are getting, all of this is offering a drag on the economy. Look, here's another thing. Even if you don't have governments that are giving money to businesses to keep them afloat, to try to save jobs, because high unemployment rates look bad for a politician, but even if you don't do that, okay, keep in mind, even if you decide not to do that, and you decide to keep somehow this company, someone's keeping this company afloat. Let's say it's not the government. All right. Money is constantly flowing into this business by buying their products. The company is horribly inefficient, and eventually that money that is flowing in to this business could be going somewhere else, somewhere where it's used more efficiently. All right? Labor that is taken up by this business because of the people they've hired, that is also being used up too. And again, it's not being used in a good manner. It's not being managed well. It's not being used in an efficient manner. Efficiency is key. Efficiency usually means better product, a higher quality product at a cheaper price, and it can mean more employment for everybody else. But in order to achieve that efficiency, businesses have to go under. Businesses have to effectively die. Job loss has to rise. And then what would happen is that labor can be distributed in more efficient manners, in better manners. That money that was being spent on these inefficient companies can be spent on better, more efficient companies where they can provide you a cheaper product at a much higher quality. It benefits everybody in the economy to do this. Okay? This is why an economy needs to crash. Not only that, but the economy needs to crash because asset valuations are really, really high. Stock valuations are high. Stock prices are high. It's very, very difficult to have enough money to invest in the stock market in this day and age. Real estate values are high. I'm feeling this. The real estate values in Texas have been rising for a long time now. Look, I know I keep belaboring the point here, but the economy needs to fall. If the economy doesn't fall now, and the economy doesn't take a dive now, and the economy just continues to go higher, then everything's going to get worse. Stocks are going to continue to get more expensive to a point where no one can buy them anymore. Real estate and other assets are going to do the exact same thing. Okay? Things need to get cheaper. Labor needs to be redistributed into the economy in a more efficient manner. Economics will do that. You don't need to have a government that does that. And then on top of that, you also have money that's being used on these inefficient businesses that need to also get redistributed. So guys, the crash needs to happen. And it's going to happen. Okay, the 36% decline in the stock market, that shouldn't have been all. It should have been worse. But look, the unemployment, the federal unemployment extra $600 a week check that everyone is going away on July 31st. And as the year goes on, debt extensions such as mortgages, car loans, and student loans, among others, are going to end as well. And when all of this ends, there will be a surge of loan delinquencies throughout the entire economy that is going to drive the economy further into a deeper recession than what everyone thought would happen. The banks are more than likely going to need another bailout in order to stay afloat, and many large and small corporations are going to die and go under as a result of it all. That is what is effectively going to happen here, ladies and gentlemen. We're not out of this yet. Now, this is all under the assumption that the government doesn't extend the stimulus packages. The government doesn't do another stimulus package. This is all under the assumption that the government doesn't provide maybe more money to businesses. This is all under the assumption that the government doesn't continue to provide the extra $600 a week. But here's the thing. If the government continues to provide that extra $600 a week, guess what's going to happen? People are not going to be incentivized to get back to work. You're going to further increase unemployment, because they're actually making more money, they're getting paid more money by staying unemployed than they are by getting their jobs back. On top of that, again, you're also allowing the businesses that are inefficient to survive, which is a drag on the overall economy. It takes more money and more labor out of the economy that could be applied elsewhere. Guys, this is just economics. This is how economics works. Okay? The market needs to crash more. It needs to be allowed to. I think what's probably going to happen here is that the government's probably going to step in, and more than likely the government's going to, continue its stimulus packets. We may see another one or two other stimulus packages throughout the year. And then they're probably going to continue the unemployment payments, although probably I don't know if they're going to continue quite at the $600 a month. But guys, this is not over yet. Okay, it's not over. You need to keep that in mind. You need to understand that. We're not out of the woods yet. And this is why it's so important, ultimately, that you need to become financially free by controlling the source of your income. I know I say this all the time, guys, but this is why. This crash is going to be bad. This is going to be way worse. This recession is going to be worse than 2008. That's what I believe. I could be wrong, but I'm pretty sure I'm right. This recession is going to be way worse. So far, everyone is expecting this V-shaped recovery, as the virus goes away, which it's not going to go away anytime soon, probably going to stick around till next year at some point. The virus is going to stick around. The fear of it's going to stick around. People are not consuming the way that they were before. Guys, I mean, look, people don't have much in the way of savings, so they don't have any money to weather the storm. This is not going to end well. All right? You need to become financially free. I implore you, take control of your income. Find a way to do it. You can do it with trading, but that's not the only way that you can do it. You need to take control of your income. Become an internet entrepreneur. Maybe if you have a skill that you think others would be willing to pay for, teach them a course. Put the course together, sell it to them for a couple $100, maybe $1,000 or whatever. However important you think your skill is, get out there and market your stuff. Just do something. Don't just rely on a business for your income, because guess what? At the end of the day, they don't care about you. Sure, yes, employees and businesses have a symbiotic relationship where they don't want to be total jerks to you, because if they're going to be that way, they're not going to be able to attract really good employers, right? So yeah, they care about you to a certain extent, but they don't care about you when it comes time to lay you off. Many businesses do care about their employees, but many businesses are still going to have to lay those employees off, one way or the other. It's either that or the whole business goes under. And you can't sacrifice the entire business for 1 or 2 or even 1,000 jobs. At the end of the day, the business exists to make money, to provide value to customers, and to make money, not to provide jobs. Okay? They're not a government. They don't steal money from one group of individuals and give it to another group, so they can create jobs. Businesses exist for one reason and one reason only: to make money by providing value to other people. And it doesn't matter how much they care about their employees. When push comes to shove, they will lay them off. So your response should be not to rely on these people for your livelihood. Okay? Stop relying on somebody else for your income and take control over your income. Guys, that's the only way to become financially free, to become truly free. and to truly control your destiny and your future. It is incredibly important that you do this. The economy, the recession is not over, and it's gonna get worse. If the loan delinquencies start to happen, it's gonna get worse. Banks are, like I said, are probably gonna be needing to be bailed out again, just like in 2008, and probably with even more money. And the government's already spending a ton of money by doing all the stimulus checks, by paying people extra in unemployment, which is further increases them to not get their jobs back or not even try to get another job. And you know what the saddest thing about all of this is? You know who these crashes, this government manipulation, this all happened because of the government. They decided to shut it all down. You know what the really sad thing is? The poorest among us in our nation are going to get hurt the worst by all of this. That's really the saddest thing. They're going to get hurt more so than anybody else. And it's sad. It really, really is sad. But guys, that's the reality that we live in. Like it or not, agree with it or not, that's the reality that we live in. So it's important that you control the source of your income. Again, trading is a great way to do that. If you're interested in doing that via trading, go check out Tier 1 Trading. You know, guys, Tier 1 Trading is an amazing trading company. They will teach you the art and the skill of trading. They're not just going to teach you a strategy. No. They're going to teach you patterns. They're going to teach you how to read price charts. They're going to teach you how to back test, how to forward test, how to engage in money management, which can exponentially grow your trading account. Right? That's how you exponentially grow your trading, is with money management. They're going to teach you how to do all this. They're going to teach you how to create a strategy. And it's amazing. They're absolutely amazing. Guys, I messed around with trading for a while and didn't really get hardly anywhere. I didn't really have any good direction, didn't really know what I was doing up until I found them. Up until I found Akil Stokes and Jason Greystone, Charles Miles, I didn't really know what I was doing. And then I found them, and the light bulb just clicked. They taught me everything I needed to know. And yeah, I firmly believe that I am now on my track to becoming a consistently profitable trader and becoming financially free. So guys, if you're interested in doing it, go check them out. They're not going to turn you down the wrong path. They're absolutely amazing. Also, if you are not interested in trading, but you still want to, get a new skill, become a internet entrepreneur, become a business owner, take control over the source of your income, then hey, go check out Skillshare.com. Guys, Skillshare is an absolutely wonderful platform, and there are hundreds, if not thousands, of courses on Skillshare. And it's really dirt cheap. I think they're doing a 1 month free right now. That's not exclusive to my show. This is just an affiliate program. They're not a sponsor on my show, but I think they're giving about a 1 month free. So it's absolutely amazing, guys. Go check them out. It's only like $100 for an entire year. It's really not that expensive. So I highly, highly, highly encourage you to go check Skillshare out and learn a new skill that you can go off and then teach somebody else. I mean, look, I've used Skillshare for tons of stuff. Website design, email copywriting, email marketing. I just finished a course on YouTube ads. I mean, there's tons of great stuff. There's how to drive, how to fly a drone. There's all kinds of amazing things out there on Skillshare. So if you're interested in learning a new skill, if you need to learn a new skill because you don't feel like you have any skills that are valuable to teach anybody or whatever, then go check them out. Skillshare is amazing. Skillshare is great. You really aren't going to go wrong, and it's dirt cheap education, guys. And just because it's cheap does not mean that it's poor quality. It's pretty good quality. Everything that I've done has been pretty top-notch. And then last but not least, guys, if you're interested in trading, then check out TradingView. Guys, TradingView.com is the #1 charting platform out there. I'm going to tell you guys a bit of a story. A long time ago, I used to, when I was just getting into all this, it was like 4 or 5 years ago, I was actually trading from a mobile app And the mobile app also had a feature on the desktop. You could actually get the charts on the desktop. Guys, I don't know. The charts sucked. You couldn't draw stuff on. It was difficult to manipulate the charts. It was difficult to, change the charts. It was difficult to do anything with the charts. It absolutely sucked. I don't even remember what charting software it was. And on top of it, it was the stock market, and it was like 20 minutes delayed. It was not pleasant to use. I didn't like it at all. TradingView is so much better. So much better. And for a fraction of the cost, I did end up going with another trading platform. I'm not going to tell you guys the name. It was a decent trading platform. It was primarily for stocks. You couldn't trade straight from the charts, which was very, very unfortunate, but it was a decent platform. But you had to pay like a monthly fee for it. And the monthly fee was really expensive. Like, I think it was like $100 a month. I could be wrong with that, but I think maybe it was like $60 a month. It doesn't matter. It was very, very expensive. And again, it was very complicated. It was a very powerful charting platform, but very, very complicated to use. But look, TradingView, TradingView is only like $20 a month. $20 a month. Come on, what do you spend $20 a month on? You could spend it on a whole host of, seriously. You spend it on tons of other stuff. If you are interested in trading, guys, this TradingView is a wonderful platform. It really, really is. And it's my favorite charting platform out there. Now, I don't use it for backtesting. I actually use another platform called NinjaTrader 7 for backtesting. They provide you free data and a whole host of other things, but that's what I use for historical data. Unfortunately, when you're looking at TradingView, I'll show you guys here real quick. If you're actually listening to this on podcast, you're not going to see this. I do apologize for that. But if you actually go to TradingView and you look at the charts, even if you were to zoom out on the weekly, you can zoom out all the way into the 1990s. But if you're looking for just an hourly chart, 60 minutes, you're not going to get a whole lot of data. Let's see how far this sucker will go back. I don't think. Yeah, so you see it only goes back to 2019. Assuming that's it, right? Okay, yeah. Just make sure it hadn't gapped up all the way up here and I couldn't see it. Yeah, it only goes back to 2019. Not exactly a very large amount of data to backtest a strategy off of. So that being said, guys, TradingView is absolutely amazing. They're awesome. I don't use it for backtesting, but I use it for forward testing and basically just showing people my trading ideas and whatnot. It's absolutely amazing. If you're interested, you could do no worse than TradingView. They're absolutely amazing. Go check them out, guys. They are the number one, in my opinion, they are the number one charting platform out there. So, guys, that kind of is going to wrap up the show. I'm sorry. I do apologize. I didn't mean for it to be depressing. Yeah, I just wanted to give you guys an update on what's happening in our economy. Odds are the government's going to come in. They're going to probably distribute more stimulus packages. They're probably going to, continue the federal unemployment checks that people have been getting. Probably won't be $600 a week. It probably will be a little less. But they're probably going to do something, because if they don't, it will definitely further this decline that we're already in. It's going to happen anyways. What I think is happening is I think they are trying to keep everything afloat up until the election in November. And I think once the election happens, it's going to be, no holds bar. I think it basically they're going to let it go. I think they're going to stop trying to manipulate the market and try to keep the market from taking a big dive. But I don't know for sure. I don't know. I don't know 100%. What I know is that we're not out of this yet. And if they continue this thing higher, that is very scary. If they continue to push the markets higher, the index is higher, the stock market higher, that's very, very, very scary. But I can tell you this right now. The indexes, the stock market, even the bond market, these are not representative of the economy. Oftentimes, it's happened multiple times throughout history where the market and the economy were not exactly the same thing, where they didn't correlate. They do correlate from time to time, but the stock market is not an indicator of economic health. Okay? It just isn't. And right now, one of the other reasons that the stock market is going higher is because the Federal Reserve is pumping money into it through the bond market. They're pumping money into the companies that are on the stock market through the bond market. And that's actually one of the biggest reasons why the markets are still going higher to this day, which is it's just bad. I mean, I'll be honest, I was hoping for the stock market crash so that I could actually, buy stuff up on the cheap. It's like, getting a discount, right? It's really actually pretty cool. I mean, it's like going into your favorite store and saying, "Hey, we got 50% off." That's great. It's absolutely great. It makes things cheaper. More people can get involved in the stock market at that point. But unfortunately, we're not seeing that yet. Hopefully we do get that. But unfortunately, we're not. So anyways, guys, I hope you guys enjoyed the episode. I hope you guys understand that you need to take the importance of taking control over the source of your income and becoming financially free. Because it's the only way to truly be free. Think about it. Not having to ask for permission to go on vacation. You can make money wherever you live. You can live anywhere you want. There's no limit as to how much money you can make. You don't have to wait for a promotion. No, you just make another product. Do another sales campaign. There is no limit to how much money you can make, ladies and gentlemen. So get out there. Find out what you really want to do in your life. Try to imagine what you want your life to look like. What is your perfect day? If you've never asked yourself that question, you need to. Ask yourself the question, what is your perfect day? Okay? And then, when you figure out what your perfect day looks like, start making the choices that pushes you in that direction so that you can have a life like the one you want. So you can have a life that you're happy with, a life that you actually want. So guys, I hope you enjoyed the episode. If you did, make sure to like the video, subscribe to the channel, and don't forget to check out the website, newmillenniumwealth.com. Also, if you're listening to this on iTunes, if you're listening on this via podcast, I take these excerpts from my weekly market analysis videos, and I put them in my podcast episodes. So guys, if you are listening to this on iTunes, make sure to leave me a rating and review. And one more thing, guys, there is one thing that I would like to ask you to do. I'm trying to grow my channel, trying to grow my YouTube channel, my podcast episodes, and in the end, I can't do that without y'all's help. I'm trying to grow this message. You see, I don't view this as just being a business for the sake of making money only. Yeah, I'm in it to make money, of course. That's why anybody does this, but I'm also in it to spread this message of financial freedom and personal empowerment to as many people who will listen. I feel personally that the more and more people that we get to believe this, the more and more people come to the belief that they can control their own life and their own destiny, the better off our world is going to get. So guys, that's why I'm doing this. I want to promote this message of financial freedom to as many people. And because ultimately the message states that it is you who controls your future. You who controls your destiny, your life. Not some politician. Not some economic crisis. You control your life. That's a very empowering message. I don't know about you, but I get very pumped when I hear that message. It's very empowering. And I hope you feel the same way. And if you do me a favor and share the show. Okay? Get out there and share it with as many people as you can. Post it on wherever you guys are at. If you guys are on Instagram, Pinterest, YouTube, Twitter, Facebook, wherever, doesn't matter. Share it. Share it with someone you think is going to enjoy it. Just share it in general. If you guys decide to do that, it is one of the biggest compliments you could ever offer to me. Guys, I love you. I'm super appreciative of you guys being here. I absolutely love it that you guys come here each and every week to listen to me. It's amazing. It fills me up with joy, and just to know that I'm providing value to you guys. And if you'll do all that for me, I'll see you guys in the next episode. Hey, have a happy 4th of July weekend for those of you who are in the United States. It's going to be a fun week. It's absolutely, I'm very, very much looking forward to it. So, hey, have fun. Know the risks, plan accordingly, and I'll see you next time.